Hello traders, this is Dion. Welcome to my channel. So in this video I want to show you this simple 1 hour trading strategy that you can use on a daily basis. So in this video the only thing that I'm asking for is for you to pay attention and not miss any single step. So just watch the whole thing. So if you are new to this channel, please consider subscribing and like this video. Okay. All right. So this is the 1 hour candle strategy. All right. So the 9 a.m. candle is the candle that you want to wait for when you are looking for this strategy. Now, one thing that I need to mention first is that on your trading view, make sure the time zone is New York time zone. New York time zone is -4. Okay, that's what you need on your trading view. All right, so when that 9 a.m. candle closes and then 10 a.m. opens, what you need is for this high or this low to be taken out. So when this high or this low has been taken out, when the high first is taken out, then you are looking for a sell. Okay, when this low is taken out, you are looking for a buy setup. All right, so the first setup that you can look for is this one. This one is very straightforward. This is where you look for a market structure shift. When the market makes this swing low, tries to go up, breaks that high, okay, and then comes back with displacement. Displacement meaning it left an imbalance there. Okay, after making this market structure shift, it left that fair value gap. So the market raided this sell side liquidity here, okay, and then came back to rebalance this fair value gap and then drop to the downside. So that is the setup that you need in this situation. Okay, this one is very straightforward. It doesn't even need a lot of explanation. You just need a market structure shift and a displacement. Okay, just wait for price to rebalance that displacement, that imbalance there that is left, and then your final take profit is going to be that low, that hourly low there. That is going to be a final take profit. Otherwise, when we go to the real chart, I'll show you how you can look for those partial profits. You should be closing profits as you before you even reach that final target. You should be in profit. All right, let's go to the next one. Okay, so this other setup, this is where you enter a trade before price makes a market structure shift. All right, so what you need, you don't just enter just because the market seems promising that it might drop so you can enter. No, what you need is a balanced price range. Okay, so when you have a balanced price range like this, it means there was a fair value gap that was taken out through displacement. Okay, when market takes out when price takes out a fair value gap that was there, so here you had a BC, a buy side imbalance here, okay, which was taken out, which means this is now an inverse fair value gap. Now you don't just enter because you have an inverse fair value gap. You still need some sort of fair value gap to be left there. This is why you need a displacement. So when a fair value gap is left there, you can enter your trade into that fair value gap because this has made a balanced price range now. A balanced price range is just two fair value gaps in the same zone. Okay, it's nothing complicated. So when you enter there, same procedure. Okay, your final take profit is supposed to be on that hourly low. This is the 9 a.m. New York session low. Okay, that is going to be your final TP. Your your stop loss is supposed to be above there. Never put your stop loss just above the fair value gap. You are going to lose a lot of trades that were supposed to go your way. So just put your stop loss above there and then wait for the market to do its magic. Okay, let's go to the next page. Okay, so another scenario that you will encounter is this one. All right. You already know that there are candles that form within other candles. Okay, this is an inside bar. All right, but these are very important. These are very important when you are taking these trades. Okay, if you ignore these, sometimes the market price will just start dropping all the way down, leaving you behind. Okay, you won't even get another chance to enter. So what you need when you have an inside bar like this, okay, make sure, you have to make sure there's an inverse fair value gap. Okay, price may not go all the way to that inverse fair value gap. It will just react, it will just take out this inside bars high and then drop to the downside. Now, like I said, don't put your stop loss above that fair value gap, because this candle right here left another fair value gap above there. This next red candle can just go all the way up, okay, to retest that new fair value gap and then start dropping. Okay, so if you put your stop loss way too close to that fair value gap, it's very risky. Okay, so put your stop loss above there and then start taking off some profits as you go on, as you go on to that low there. Okay, so that small candle right there, that small candle, when you go down to maybe 15 minutes, I mean 15 seconds time frame, there are those time frames. There are people that that take trades on 15 seconds time frame. Okay, so this, there's still some price action that is happening down there, but just to be on the safe side, if you take your sell here, your stop loss is supposed to be all the way up there. Okay, let's go to the next. All right, now this one, what you need, um, of course, you need this displacement. Now, there are certain cases where maybe you just missed. Okay, of course, there's a balanced price range here. You have a fair value gap here, and then you have another fair value gap here. So you can take your trade there and then drop to the downside. But maybe you missed there, or maybe you were doubting yourself. You are still waiting for that market structure shift. Okay, so when the market makes uh, a swing low here, okay, and then try to go up and then come down, you can mark this as your market structure shift. Now, for you to enter within this zone here, make sure there's a displacement. Okay, when the market leaves a displacement like this, you can enter here and then put your stop loss above there, but this tends to be more risky. Okay, because if you put your stop loss here, as you can see here, this is not completely filled up. That fair value gap is not completely filled up. The market can go all the way up, take you out, fill up that, rebalance that fair value gap, and then drops to the downside after taking you out. All right, this is why you just need to have guts sometimes, guys. Okay, if you still have that fear of losing, you are going to even lose more. Okay, because if you lose here, it doesn't really matter that much. The market might give you just another setup, you enter and then you even forgot that you are just from a losing trade. So just make sure you don't wait for the market to give you this market structure shift all the way down here and then take that sell there. This is not an inverse fair value gap. Sorry, I made the mistake here. All right, and another thing, if you are trying to enter here, a late entry here, make sure in this, between this high and that low, you are still in the premium. If you are taking a sell, you are still in the premium zone. Make sure price doesn't go below that equilibrium level. Okay, because if it goes below that equilibrium level, you are not going to make a good trade. Okay, the trade might go your way, but the risk is going to be too big, and if you keep that up, it's going to be a bad habit for you. Okay, so Yeah, just remember that the next time you try to wait for too long, and then yeah. Okay, let's go to the next page. All right, talking about price running away without you, there are certain situations where the market does something like this. All right, uh, these are some of the most unfortunate situations. I still I can't get used to this. Okay, yeah. So price sometimes can make this market structure shift and even leave a fair value gap like that, but won't go back to that fair value gap. Okay. So if you are a really a good risk taker, if the market leaves that fair value gap there, and this is the candle that makes a market structure shift, if you want, you can enter a trade. You can take a sell here and then wait for the market to rebalance there. Okay. So if you are taking 5 trades, if you are supposed to take 5 trades, you can try to take just 2 trades here and then put your stop loss above there. Okay. If those 2 trades go all the way, it's good for you. Okay. If those 2 trades hit a stop loss, it's still good for you. You didn't take a lot of trades. Okay, so this is where you have to manage your, if you are trying to take a trade just based on this candle alone without waiting for the market to go back to rebalance into that imbalance there, yeah, you have to make sure you are managing your trade very well, you are managing your risk very well. Another thing that I need to mention is that this works also even better if there's a bias, a higher time frame bias. By higher time frame bias, I mean anything above, at least it's supposed to be 15 minutes, 1 hour, 4 hour, and then going up. If there's a daily bias, that's even better. Okay, sometimes you'll be in a 15-minute POI, you won't even know it. But if you see that you are there, it's even better for you, because even if the market goes all the way down to this 1 hour low here, on your 15-minute chart, maybe there's a low that you are still targeting. So after taking off some of the profits, you can still hold all the way down. So yeah, that is that is something that is the other thing that you just need to consider. All right, so let's go to the real chart. All right, so this is the GBP USD on the 1 hour time frame. So when I say New York time zone, this is what I mean. This right here, this is the part where you change it. Okay, if your time zone is not in -4, it's going to be a bit difficult for you. So just make sure you change it to -4 here, or where it's written New York. Okay, that's the time zone that you want this strategy to work. If you want this strategy to work. All right, so now the setups that we are just going to look for setups that happened this week. So let's see where Monday is. Monday is somewhere here before 9. I have to start before, okay, somewhere here. All right, so here, okay, this was 8, and this is the this is the 9 a.m. Uh, this is the 9 a.m. New York session candle. Okay, so the only thing that you need to do, mark its high, okay, like that, and also the low. All right, so you just need the high or the low to be taken out first. So the candle that you need to concentrate on is the 10 a.m. candle. So I don't know if I've already mentioned this. You need to look for a setup between 10 a.m. and 11 a.m. Do not go beyond 11 a.m. Okay, it's between 10 a.m. and 11 a.m. So here, okay, let's go down to 1 minute. Let's go down to 1 minute. See if we can get somewhere. All right, so guys, the only thing that you need is to have some patience and discipline. Okay, there's no need for you to rush or anything. You've already been given a time that you need to be waiting for these things. Okay, all right, so this is where we are. Okay, so you can see here price took out the low here. This is the low, if you remember very well. So this low here, okay, the market took out this low here. You have to start from up there. You can see the market made this pullback, made that swing high, started falling to the downside again. It was just falling, and then made another pullback here. That's another swing high, and then continued going to the downside. Now after reaching this far here, the market made this displacement here. Now if you go back to those setups that I already showed you on those drawings, you can already see why you were supposed to take this trade just here, okay, and then place your stop loss down here. This is an inside candle here, okay, this is an inside candle. So if you took your trade here, just down here, there's no reason for you to put your stop loss just below here. If you took your trade just here, you can't put your stop loss below this candle here, okay. Your stop loss is always supposed to be that low there, okay. This is the displacement candle. So this is the reason you put your stop loss down here, because this inside candle here being taken out by another bearish candle here just leaves another fair value gap down here that can be exploited by the market. All right, now when you're taking out profits, I advise that you start with a 1-to-2 risk to reward ratio. Okay, you start with a 1-to-2 risk to reward ratio, and then you can be doing this. Okay, here you can see the market went down again, and this was after 11 a.m. okay, like I said, you have to take your buy or your sell before 11 a.m. What happens after that? That's just you taking a loss or a profit. Okay, so when you take your buy here and then you are waiting for your first take profit here, when you get your first take profit here, what you need to do is take off some profits here, okay, close some profits. Don't be greedy, don't do any unnecessary stuff. Close off some profits and then start targeting these swing highs here, okay. These are the points that you need to start targeting before the market reaches that 1 hour high, the one that we marked. Okay, you need to be taking profits as the market is going there, because sometimes it won't go all the way. It will just go maybe halfway and then go to the downside. All right, so as you are taking off profits, make sure you also break even, okay, so that these other profits are just going to be bonuses. You are going to be trading risk free. Okay, so when you reach that high there, don't even dare to be greedy. Don't even dare to be greedy. When the market reaches that high, you can just close. Okay, whatever trades that are still running, you can just close and then wait for another day. That's how you're supposed to do it. Okay, let's look for another one. Let's see if we can get another one. Okay, so that was Monday. All right, let's go Tuesday. Tuesday 9 okay. Tuesday 9, oh, okay, this is the 9 a.m. candle. So you can mark the low and the high. This is the low. Okay, that's the low. And the high. All right, let's go down to 1 minute. It's not too complicated, guys. Just exercise some patience. Exercise some patience and some discipline. Okay, here it was very obvious. You can see it took out the low first. Okay, so after the low has been taken out here, you can see here there was no market structure shift or a balanced price range or anything. There was no inverse fair value gap. There was nothing here. Okay, so you still need to wait for this low to be taken out. So when that has been taken out, and then here you can see here this fair value gap here, it was inversed. Okay, so that is an inverse fair value gap right there. Okay, so we have an inverse fair value gap. Okay, but that high has not been, so we don't have we don't have a market structure shift yet. Okay, the market went to the downside again. I want you to see something here. When the market went up, it left another fair value gap down here. It's not a BPR, but that is a fair value gap here. So you have two things here. You have two things here. You have an inverse fair value gap. The market just invests, okay, this fair value gap, and then left another fair value gap down here. Okay. That is a buy side imbalance. You can call it a BC if you watched my fair value gap video. All right. So when the market went up and left this fair value gap here, this is what you can do now. Okay. Just wait for price to come back to this fair value gap right here, not this inverse fair value gap. What you want is for price to come back to that displacement area. That's what you need. Okay, it has to rebalance that displacement area. All right, so when it comes back with this wick right here, when it comes back like that, okay, you enter right there on that wick. Now here, like I keep on saying, never make a mistake of putting your stop loss just below that fair value gap. The point of a fair value gap is for price to come back and rebalance. So rebalancing doesn't mean that price will just try to come with wicks and then not close below this fair value gap. No, it's trying to close this fair value gap. Okay, so make sure you put your stop loss down here. Okay, I know it looks like a big stop loss, but it makes more sense we are looking at it on the higher time frame level. So even here, make sure your first profit is taken on the 1 to 2 risk to reward ratio. Okay. Yeah. So on the 1 to 2 risk to reward ratio, you take off your first profit. Okay. After taking off some of the profits here, if you want, you can even move your stop loss to break even like that. Okay, just to run a risk-free trade. So when when you've taken off this first profit, now you can start targeting these swing highs. Okay, it doesn't matter how close they are to whatever, just start targeting these swing highs before you go all the way to that. You can see all these swing highs. Okay, before you go all the way uh, to that 1 hour high. Okay, at least you've taken off profits here. All right, it doesn't matter. One thing that I've come to notice is that when for us, sometimes even if you see a very clear setup, you want to start looking for a lot more things. Of course, if you have a bias, that's even better. That's even better. Okay, that's even going to work better for you. Okay, now if you start putting in a lot more stuff that are not even necessary, you are going to you are going to suffer. Okay, now when price is cluster, when there's like a lot of consolidation on your setup, another thing that has really helped me out a lot is SMT divergence. Okay, SMT divergence. If you trade currencies, I know you know that GBP USD and Euro USD, they are positively correlated. Okay, so if you want, you can use some divergence. Okay, you can use some divergence like this, but you don't really need it. If you really know how to read your price, you really don't need it. Okay, so in this case, maybe with Euro USD was making some lower lows and swept liquidity down here. Okay, but with GBP USD, which is actually a stronger currency pair, was respecting the fair value gap there. Okay, so what I'm saying is just exercise some patience and follow your rules. All right, let's look for more setups if we can find any. Let's see. Uh, let's see. We're on Tuesday. Let's see Wednesday. Wednesday 9 a.m. Okay, so this is 9. This is 9 a.m. Okay. Mark our candles like that. Okay, as you can see, I'm not even considering the daily bias yet. Okay, but if you have the daily bias, guys, please consider your daily bias. It gives you a lot of confidence, I'm telling you. So that 9 a.m. candle, let's see what happened. If there was any setup. Okay. Okay, right here. So the low was taken out first. So let's see if we can get anything. All right, so the low was taken out here. It was taken out, and then as you can clearly see, you don't have here. This is an inside candle. Okay, this is an inside candle. So there's no balance price range here. These are just inside candle. The only candle that is independent is this one here that came out like that. Okay, so it would have made more sense if there was a balanced price range and then you take a risk at least, and then yeah, try to see if it goes your way. Otherwise, you are still waiting, makes another low, try to make a swing high there, drops, another pullback, drops aggressively, tries to go back, another pullback, it's still going down. Okay, until it makes a what? A market structure shift there. So the market was still going down here. Down here, if you want, you can mark your market structure shift down here Okay, it's going to be the same result. So we'll just mark it up there on that big pullback there. That is a market structure shift. If you want, you can mark it down here. But we are just looking at the displacement candle there. Okay. When I'm talking about displacement, I'm talking about this. Okay. Even down here, if you marked your market structure shift down here, there's a displacement here. Okay. But you have another displacement just there. Okay. And whichever displacement where you're going to enter, just make sure your stop loss is down here. It doesn't matter whether you're entering here or here, your stop loss has to be down here. So another thing, another thing that you need to consider, okay, maybe if you are if maybe you are just trying to be more, I don't know, more sure of what you are doing, order blocks. Okay, the market can come all the way down to the order block and then go to the upside. Okay, this is why we put our stop loss all the way down there. Okay, so if you took this long here, you entered right there, okay, right there into that fair value gap, your stop loss is supposed to be down there. Again, your first take profit is supposed to be 1 to 2 risk to reward ratio. Right there, you take off some of the profits, guys. If you want, you even break even so that you don't lose anything as you go along. Okay, so as I keep on saying, target these swing highs. Okay, you can see our hourly, our 1 hour high is just all the way up there. So you are just targeting these swing highs. I don't know how many trades you took down there, but just make sure you're taking off some trades, okay, until you go all the way to that high. Okay, if price takes you all the way to that high, that's even better. Did it go all the way high? Yeah, some trades take really really long for them to pan out, but that doesn't matter if you've already taken off profits. Okay, it only matters if you are not taking any profits. This is why you find yourself just checking the chart here and there. You can't even breathe, you can't even do your normal things that you do on a daily basis. So yeah, that could have been another win for you. Okay, a good 1 to 8 risk to reward ratio. All right, let's look for another one. This was Wednesday. Let's go to Thursday. We can get anything on Thursday. Okay, this is Thursday. Thursday. Yeah, so Thursday Thursday happened. So this is the following day. Now the following day you were still holding this trade here. Okay, if you are still holding this trade, there's no need for you to start looking for another trade here. In fact, here if we mark this here, you can see uh, I don't think price even gave us a chance to. I don't think it even gave a setup here because it didn't take out yesterday's high there. So let's go down to 1 minute. See what happens. Yeah, yeah. So as you can see, the high was taken out first, but it was too aggressive. It was still chasing that yesterday's 9 a.m. high. Okay, so here you can see if you are looking for a setup between 10 and 11, 11 is okay, 11 is somewhere here. Yeah, you can see here there's no setup. Okay, there's absolutely no setup, so there's no need for you to even waste your time here. Okay, so okay, now we are remaining with okay. Mhm. Let's see, this was Friday, Friday 9 a.m. Let's see. All right, this is the candle, 9 a.m. candle. Okay, this was on Friday. All right. All right. Even on Friday, even on Friday, as you can see here, there was this big movement here just to take out when it was taking out all these buy side liquidity here. Okay. Now, after taking out that buy side liquidity there, the market started dropping, leaving displacement here. Now, this is where you still need to be careful. Okay. As you can see here, you still have this big, this huge fair value gap here. But the market gives you this other fair value gap, this other side, meaning you have a balanced price range there. Okay, but it hasn't made that market structure shift. But if you know your setups, if you just follow your rules and then follow the setups that I've already given you on the first page, here you can take a risk here. Okay, right here you have a balanced price range right here. All right, this is a balanced price range right here. Okay, so if you didn't take a trade there, this is where the market makes this, if you want, you can call it an inside market structure shift. Okay, it made this swing low, tried to go up, and then took out this swing low right here, and then made this displacement right here. All right, so when you have that displacement again and then you enter here, make sure your stop loss is supposed to be all the way up there. But if you entered here, so some of the things that make us fail to enter certain trades is fear of losing. Okay, you just don't want to lose. That's the thing. Okay, you don't want to lose. So the moment you lose one and then the market makes a market structure shift down here, you won't take this trade because you've already lost up there. Okay, so just make sure you are following the rules. There's no need for you to, you know, try to complicate things. It's very straightforward. This is a very straightforward strategy, guys. Okay, so 1 to 2, you take off some of the profits here. Okay, you take off some of the profits here. The swing low for the hourly chart was just way too near here. Okay, it was just way too near. So yeah, Yeah, so you can stop it right there. If you want to hold, I don't know what market structure mapping that you have on your 15 minutes or your 4-hour chart or whatever. It does. If you want to hold, just make sure you've taken off a lot of profits here. If you're trying to hold all the way to the to that swing low there. Okay, just make sure you've taken off a lot of profits within this range, so that whatever happens down here, it doesn't concern you. Okay, it's just going to give you some bonuses. All right, guys, so that's a very simple strategy. I know I didn't want this to be a long video, but it happens. It happens. So I hope you got something here. If you are new to this channel, please consider to subscribe to this channel and like this video if you enjoyed the explanation. Otherwise, look out for more videos. Until next time, happy trading.